Well, hello there, my friends. Chris Marcus here with you on Friday, January 26th for Arcadia's weekly market wrap-up. And wow, another stunningly fascinating week in the financial markets, watching the dollar get pounded as we speak. So by all means, obviously I'm a little biased, although I think you'll want to stay tuned for what's coming up here because it's almost like if you wanted to really destroy things, what would you actually do? And you can just take a look at some of the actions that we hear, which more and more again, is there a lot of stuff where maybe things aren't quite as they're intended? Yes, I think that's the case. But to the degree, it's pretty remarkable that with everything that's going on, here, US Treasury Secretary Steve Mnuchin saying a weaker dollar is good for the US. And certainly his friends over at the Federal Reserve have helped that cause admirably. But let's go to the quote he had here, because you don't really have to be an economist. You don't have to work at a bank or get an MBA to figure this stuff out. It's really fortunately, it's not really as complex as we were led to believe. So Steve here says, obviously a weaker dollar is good for us as it relates to trade and opportunities. He told reporters in Davos, adding, the currency's short-term value is not a concern of ours at all. Certainly the actions reflect that, but let's continue on here. Longer term, the strength of the dollar is a reflection of the strength of the U.S. economy and the fact that it is and we will continue to be the primary currency in terms of the reserve currency. Alrighty. So which one is it? Is a weak dollar good or is the strong dollar good? I mean, he's actually saying both here. And what he's referring to in saying is a weak dollar good for us as it relates to trade, whether it's the U.S. or anyone, common Keynesian myth that gets blasted and indoctrinated across the population anytime you turn on a financial channel or show is this idea that the weaker, having a weaker currency is a great thing economically. Now, what they're saying is that, well, if our currency is weaker, that will make it less expensive for foreigners to buy goods that we're exporting, which is true. Yet, I mean, the problem is that, yeah, you're putting anything you export on sale. So if you were selling something for $100 and now the dollar drops half its value, people who are paying in the foreign currency that appreciates against the dollar, yeah, they'll probably buy more because things just went 50% off or whatever amount on sale. Yet what Mnuchin doesn't mention is how everything that is imported becomes twice as expensive, which, especially when you have an economic arrangement where so much of the things that we here in America consume are produced in China and places other than the US, yes, it would increase the profits of exporters if you have a weaker dollar, but that's the whole point. That's why you see inflation, because everything that comes back, which I don't think really we've seen yet, because a lot of the inflation has gone into the financial markets with the stock, bond, and real estate bubble, yet you weaken the currency and yes, it's good for a select group of people, not so good as a whole. And the way you can always know that there's a flaw in any of these things, I don't know if I explained that completely brilliantly, but just, so if a weak dollar is good, then should a weaker dollar be better, the weakest dollar be the best? If this was actually logical, then that would mean that all you have to do to create infinite prosperity is just print away and blast more credit, and give everybody $1 trillion bills, which is not far off from what the Fed has done, except who got the $1 trillion bills was not evenly distributed, I would say. But that's, and I'm sure you'll hear a lot of that because all these governments, I mean, look at what Shinzo Abe in Japan, how he got elected, basically with a promise to print and inflate and create another stock market bubble, which he has done, and which people think is great. Even here, a couple times Trump has tweeted or said, sorry, I always find it. I do have a Twitter account now, although it just always makes me giggle when I go tweet something. Anyway, Trump was talking recently about how, look at what a great job I've done. The economy, or this, as measured by the stock market, is roaring. Yet, of course, that completely leaves out the whole printed money and Fed thing, where you can make the stock market go to any level you want if you print enough currency. So, yeah, otherwise you could just print infinitely and everything would be perfect, which of course is unfortunately not how it works. But again, just the contradiction where Mnuchin's saying a weaker dollar is good, and then he's saying longer term, the strength of the dollar is a reflection of the strength of the US economy. So actually, maybe having a legitimate currency is a good thing, which that part I would agree with. Although this last tag he has here, and will continue to be the primary currency in terms of the reserve currency, I personally disagree with Steve on that one, with all due respect, as we will explain in the rest of this video, because I don't know what more signs Steve could want to see that that's changing. I believe it was, well, actually, I believe it was delayed, the Petro Yuan, but basically an arrangement to trade oil outside of dollars. That, especially when that's China, the biggest creditor. And let's think about what's happening in China and see if Steve is correct that, the dollar's primary currency and will continue to be. Because with everything that's going on in China, the fact is that a lot of the products come from there and a lot of the financing comes from there. And recently China mentioned that they were slowing or halting purchases of US Treasuries. But what I'd like to highlight here was basically in this article on Bloomberg, they said that the decision would be made on, and I quote, "The officials recommended that the nation closely watch factors such as the outlook for supply of U.S. government debt." Basically, translation is the U.S. just going to keep running up the debt and deficit infinitely? Is there really any plan to do anything about that? Along with political developments, including trade disputes between the two world's biggest economies. And of course, what do we have here? This was back in December, but Trump to accuse China of economic aggression. Whether he actually does that or not, economic aggression, currency manipulators, I mean, you still see, it's like these things keep coming out and it's not, I mean, I guess there's some situations where you can just say whatever you feel like saying, although if you borrowed $50,000 from a bookie, went to Vegas, and it didn't work out, and the guy's not so pleasant in his collection means, then, maybe you want to be careful about what you're doing and saying. And that's essentially the situation economically where China has the U.S., again, with a lot of, if the Fed's going to stop buying bonds and China's going to stop buying bonds, and the U.S. is spending money faster than ever, where is it going to come from? Of course, you would have a bond market debacle, which is still very well possible. My personal guess is that they just print into infinity. But anyway, so at least on part one, we have the debt supply growing faster than ever. Then part two, trade on political developments, including trade disputes Here, Trump saying they're economic aggressor. And then shortly after that, article about them thinking about slowing or halting purchases. China's rating agency downgrades U.S. credit, warns U.S. insolvency would detonate next crisis, which is certainly what we seem to be heading towards. And of course, just to see the actual trading, here's the dollar index, which has been getting pretty thoroughly pummeled. Now, what's interesting here is that the dollar index is measuring the dollar against a basket of other currencies, which I believe about 57% is euros and another 13% is yen. So measuring against a basket of currencies where 57% actually is printing enough money so that they have negative interest rates. The Japanese, like we mentioned, Shinzo Abe got elected on a promise to print money, which he has fulfilled. I'm sure real interest rates are negative there as well. So, I mean, it's not like, you're measuring it against anything remotely stable, and yet still, let's take a look at the 1 month here, or quickly while we have it up. Here's the 1 year. So you can see last year, I think it was even a little bit higher when Trump was elected. So yeah, you have back here, here's December of 2016, gets up around 103. I think it may have hit 104 somewhere in there. But as you can see, pretty much over 2017, the dollar was sinking. And again, let's go to how about we take a look at the 3-monther there. And look, even back from November, and keep in mind, this was when cryptocurrencies were skyrocketing, which, as much as, again, I continue to hear everyone talk about how they've crashed, which, keep in mind, Bitcoin was about $1,000 at the beginning of 2017. And while it did get almost up to 20,000, it's still at 10 or 11,000 now. So whether that's a crash, I'm not sure, but we'll come back to that. But in either case, you see these last 3 months where even, here's the 18th, or January 18th. All right, so here's January 9th. It's at 92 and has just plummeted to 89. And keep in mind, this is a currency. This is, as Steve Mnuchin said, the world's reserve currency. It's not like a biotech or a crypto or an internet stock. It's supposed to be stable, yet these are big moves, especially against a basket of other currencies that, are pretty weak as well. Which is why I've mentioned this before, and I continue to feel this way, where we take a look over here at the crypto prices. So there's Bitcoin, just under 11,000. My favorite there, Litecoin, struggling a little bit this week, down to $175. But how do all these things connect here? I'm almost surprised. I don't feel as if I've heard anyone or many mention that, yes, there's this rise. We saw this rise in the price of cryptos, and some people are saying it's a bubble, and there is speculation, but forget all of that for a second. So we have Bitcoin here. So let's just call it $11,000 per coin. So, yes, I think there's a component of the cryptos that has value, and as people are choosing to take their money out of the dollar system and put it in there, and to the degree that whether it's the cryptocurrencies or in some cases the alt tokens that are business models based on those cryptocurrencies, that are companies that actually have products So there's that one component of value, which I do believe is at play. Yet also, look again at what's happening. So this is measuring, we see over these past 3 months, the past month in particular, the dollar is falling. Now, how much is the dollar falling against any stable currency? Again, I'm not going to sit here and say that cryptos are low volatility or yet, so call it an emerging asset class or whatever you will. Part of this is that I believe we're seeing finally the beginning stages of really the collapse of the dollar in the fashion that we've known it for so long, whether you want to call that a hyperinflation or not, but it's just a fraction. So let's say people don't value Bitcoin any more highly than they did in the past. And if you increase, let's say you double the supply of dollars, so let's say 11,000 is fair value, whether you believe that or not. Let's just call it fair value. If nothing happened with the Bitcoin, if you double the money supply and it's just a fraction, then yeah, you'd expect theoretically all things would double in the price of that currency that's been doubled. That's what Steve Mnuchin is missing there. And here's, I don't want to say I love this chart. I mean, it's kind of terrifying in its own right. But consider that from the Fed's inception back, I believe was 1913 until 2008, we'd always heard that there was a lot of money printed then, yet look at what happened since 2008. You go for the first 100 years went up to 800 billion. And actually this chart, I don't believe has the whole part here because it's about 4 trillion now. So 100 years from 0 to 0.8 trillion, if you will, then to 4 trillion, which is basically went up by a multiple of 5. Of course, we have an ongoing case of Dr. Mark Skidmore finding that there's been $21 trillion of undocumented adjustments between the Department of Defense and the Department of Urban Development. So God only knows how much money is out there, but take a look at that chart for a second. And does it remind you of anything? Does that remind you of the charts people are showing of the cryptos where, let's take a look back here at Bitcoin. So Bitcoin charts, please, loading data from the server. All right, there we go. So here is the all-time chart. Okay, so isn't this interesting? Take a look. Here is the money supply. And there's the price of Bitcoin. Money supply, price of Bitcoin. So now maybe the timing is slightly different, although that's kind of to be expected in a situation like this. When you look at the similarities between these two, I mean, that's exactly what would happen if you were measuring against, and again, yes, I understand. I'm not going to say Bitcoin is stable as a currency in one perspective, yet still everyone's wondering if this is a bubble. Yet I would counter with, at least to some degree, as the supply of dollars have increased, which would mean that the value of the dollar decreasing, that we have seen at least some stages of the beginning of a hyperinflation of the dollar. So fortunately, I think it's still very early, because as I keep thinking about the cryptos where, and I have invested in about 7 or 8 different crypto and alt tokens at this point. And I'm always thinking, well, is there, obviously there is risk to any trade, although, we're talking about the dollar so far has gone down to 89. which is a big move, yet it's not as if we've gotten into complete, wider scale where people are actually noticing. Although I think we're seeing the beginning of that as reflected in the pricing of cryptos, which fortunately, I used to be really worried about this, scared to think, it was going to be all heck breaking loose in the streets. Fortunately, I don't really believe that necessarily is going to be the case anymore, where as I understand and learn more about the cryptos and how it replaces a lot of the flawed infrastructure where things had been prevented from growing organically, without a lot of the, whether you want to call it theft via banking or just all the loss of value that comes from the money printing and all this other stuff that has gone on that the cryptos are replacing. I think it's actually going to be a great time of freedom and eventually prosperity and enlightenment, hopefully, as well. So by all means, the point of the video isn't to leave you not feeling well about what's happening, but just to explain what's happening, why I continue. Again, I'm not recommending anybody to do anything, but just explaining why what I've done is take pretty much the majority of what I have out of the dollar-based system, whether that's precious metals. Keep in mind that I still expect to see a chart like this with gold and silver whenever that manipulation is overwhelmed, which I think we have a good chance of seeing this year. But fascinating things happening. It's an incredibly historic period of time in life. And hopefully this is helpful. Again, I'm not telling anyone else what to do, just to the degree that I've found this fascinating and studying finance, working in Wall Street for a while before leaving to share what I discovered. Hopefully this is of help to you, and leave a thumbs up, hit the darn subscribe button. I mean, geez, need to summarize the whole thing in 15 minutes once a week. So what else could you ask for? So with that said, have a blessed weekend. Appreciate you watching as always, and we will see you next week.